It's time to talk about Spaceship and the long-term investor. Spaceship is a popular micro-investing platform known for its themed portfolios like Universe, Earth, and Origin. These portfolios give you exposure to different slices of the global market, particularly with a focus on companies aligned with their where the world is going philosophy, often with a tech tilt. Now, for a long-term investor, let's break down the pros and cons. On the positive side, Spaceship has portfolios designed for long-term growth. Their suggested minimum holding periods are generally 7 years for their growth-focused portfolios. This long time frame is essential because their tech-heavy holdings, like the Universe portfolio, can be volatile. Looking at their history, the performance can be high in bull markets, but they can also take a significant hit during market downturns, as seen in the past. This volatility is less of an issue when you have a long time horizon to ride out the dips. They also offer dollar cost averaging by allowing you to set up regular investments with no minimum amount, which is great for building wealth consistently over time, regardless of market peaks and troughs. The fees for their Voyager portfolios are generally considered competitive, with low management fees, though there is a flat monthly fee for balances over a certain amount. For a very large long-term balance, this flat fee structure might eventually become cheaper than a percentage-based ETF fee, but for smaller balances, it can be relatively high. On the flip side, their portfolios are often actively managed and have a relatively narrow focus, particularly the Universe portfolio, which means they are not as broadly diversified as a standard global index ETF. This concentrated bet on the tech sector, while offering high growth potential, also carries higher inherent risk, often labeled as a high-risk profile. Over the very long term, a broad, low-fee index fund often proves difficult to beat. So, is Spaceship good for long-term investors? It depends on your approach. If you are comfortable with higher risk and believe in their tech-centric, where the world is going investment thesis, and you're committed to a long time frame, 7 or more years, then one of their portfolios like Universe or Earth could be a good fit for a portion of your wealth. However, if your goal is the lowest cost, most diversified, and simplest approach for your core, decades-long wealth building, then a traditional broad market index fund or low-cost ETF is generally the proven winner. Spaceship is a solid option, particularly for new investors or for those looking to add a managed, themed growth component to their portfolio, provided they fully understand and accept the higher risk profile and the commitment to a long holding period. Do your research, understand their fees, and decide if their specific investment philosophy aligns with your ultimate financial destination.